Guys, everyone's running from real estate right now. Interest rates are up a ton. Headlines are screaming crash and fear is in the air. But here's the thing. History shows us that fear is investors' best friend. One of the worst time to buy is actually the opportunity to grasp life-changing wealth. Let's start with the obvious. Yes, in some places, home prices are coming down significantly, but not everywhere. In fact, not even in the majority of places. There are still plenty of markets holding firm and even getting better. And here's what most people don't understand. Higher interest rates are a gift. They're a gift for the investor, not for speculators, not for amateurs, but for disciplined, patient, long-term investors. When money gets more expensive, it gets harder to get money. Bad investors who only make money when money's cheap have to get out of the way. They might sit there and say, well, no, good investors. Listen, good investors like cheap money too. But you know what they don't like? Bad money chasing their good deals. That's what makes investments harder. Look at Warren Buffett and Charlie Munger. As interest rates were low, they said, we can't find good deals out there. Why? Because financing was easy. It was easy to go out there and finance a company. So they would get outbid like crazy. Guys, very easy thing for you to understand. Harder markets equal better deals. Boom. Prime example. Oh, wait. The worst real estate market in our history. 3 or 4 years before, you'd have to spend $100,000 to $150,000 in Cleveland to buy a house that I was buying for around $8,000 or $10,000. Why? Because no one wanted those assets. Less competition. When rates were low and things were easy, everyone was a genius. People bought anything and everything because financing was cheap. I remember meeting with this guy who I thought was an absolute moron. He said to me, I used to walk in the bank and they would just literally hand me over my credit line. I said, what was your collateral? No collateral. They just knew I was buying real estate. That's over, and that's a good thing. Guys like that are going to be off the map and makes it good for real investors like you. When interest rates rise, competition falls, especially from amateurs and people who aren't doing the real math. They chase price, not fundamentals. They want to buy fast, not smart. But we invest differently. There's a way to buy fast and smart, but that's when people are more scared. We want to fight great properties at great prices, and that's easier when the noise dies down, when the competition is less. Because investing isn't about what's easy. It's about doing what's right. Let's talk about fear. People are scared. They think real estate's going to crash. It's one of the most common things I hear. Oh, I'm waiting for the real estate crash. Prices are going to drop for years. There's no point in buying until the bottom is obvious. Well, here's the problem. The bottom is only obvious in hindsight. We never know when the bottom is going to be. A few people might guess correctly, but they don't know. And history shows us something else. When the masses are most afraid, that's when the opportunity is there. Now, we're not saying that prices are going to fall. They're going to fall a ton, blah, 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 blah. In some places, they might. But that's not the point of this video. The point is we're finally returning to fundamentals. Supply and demand, income, things even like replacement costs. Guys, take a look at markets that I live in, like Cleveland and Detroit. Not exactly headline cities, but they're seeing strong appreciation. Why? Because it's not about population growth. It's not about the newest skyscraper. It's about what it costs to build and what people earn. It's about what's being built and what's in demand. If you have a city that has stagnant population growth and nobody's building, your property is going to appreciate with inflation. If you have a city like Dallas that's growing like crazy, but people are overbuilding, you're going to have a problem. We saw that with Phoenix and Vegas and South Florida back in 2007. Why? Because even though those populations were still increasing over the years of the crash, they still were seeing massive drops in price. Now, in my opinion, in the long run, here is where prices go. Price follows income as a whole. If you told me right now that 30 years from now, the average person in this country is going to make 3x what they make today, my comment would be, well, then real estate's probably going to be 3 times higher than it is today overall. That's the way I look at it. Look at places like Youngstown, Ohio. The city has lost 18% of its population since 1980. If I told you back in 1980 that Youngstown was going to do that, people would say, oh, real estate's going to crash. And yet, housing prices and rents have still grown steadily And actually, in a lot of markets, even outperform the fast-growing markets that we see in the South. Why? Because the cost to build still goes up. The cost for labor still goes up. People's incomes are still going up. And most importantly, there isn't much building going on in Youngstown. Everyone obsesses over growth. I once sat on a panel with one guy who's actually a self-professed billionaire and a bunch of people who said they were real estate experts. And somebody in the crowd asked the question, where would you buy right now if you could? And I was the leader of the panel. I said, I want to go last because I knew what everybody was going to say. And every single one of them, without fail, said, go to growing markets. And I said, these guys don't understand investing if that's what they think. It's not about going to demand markets. It's about finding the right balance of price and value. And that can be found in non-growing markets. If supply is tight and construction costs are going up nationwide, prices are still going to go up. Like in cities like Cleveland. I think in the last year, Cleveland's housing market's up 11%. And there are other major markets that are actually down. That's short term. I get that. So when people say now's not a good time to buy, we say compared to what? Because when it's easy to buy, when prices are up and rates are low, everyone's piling in. And that's when you should be nervous because the more people that want an asset, the higher the price goes. The fundamentals aren't necessarily going up, but the prices. Hard markets reward smart investors. And right now it's getting harder, which is exactly why it might be one of the best times to start looking. Guys, I've bought a lot of short-term rental, high-end properties lately. And all the realtors I work with are telling me, oh yeah, people are scared away because of high rates. And it makes me just scratch my head going, why? If you're factoring in interest rates into your analysis, and by the way, with our real estate calculator here, we factor in immediately our mortgage, our refinance dollars. Why? Because it matters. It's part of your discounted cash flow. The higher your rate, the lower your cash flow, and therefore the lower your value. I get that, but it doesn't mean you should stop buying. It means you should be buying more because now all of a sudden the price is lower. When people are scared, when people are apprehensive, start taking a look. I'm not telling you to jump on in. Start taking a look and understanding why they're doing that. Start understanding why are Cleveland, Detroit, and these other boring Midwest towns outperforming some other major markets. Yes, it's in the short run, but the point is, if it's all about population growth, then those other markets should constantly be doing better, but they don't. Cleveland, Detroit didn't see 70% loss in value like Phoenix and Vegas did during the crash of 2007 and 8. There were other things at work, supply issues. So much was built, they had to weed that crap out. So many properties came to market because the bank said, we don't want this stuff anymore. They called them toxic assets. I own properties in Dallas. I love Dallas, but I'm always a little apprehensive about Dallas when I look in there. Why? Because they just keep building and building. So my competition isn't just the guy next door. It's the guy building the new property 2 streets over. You've got to factor that in. And in understanding long-term growth of property, remember, incomes go up. So the labor to go do that work to build more properties goes up. The materials cost goes up. That's why values go up. Values go up because of the devaluation of the dollar, because of inflation. That's what that is. So guys, if you want to build real wealth with real estate and you want to take advantage of the current market, you need to have a rock solid plan. That's what we break down in the next video. So click the video on your screen and check out our full course on real estate investing. Thank you for your time.